Alright everybody, this is video 6, step 6 of technical analysis, Luciano theory, is applying harmonic patterns. Now, in this video, I'm just going to give you a general basic understanding of what a harmonic pattern is. We'll cover a few harmonic patterns, and then I'll show you a harmonic pattern on the chart, okay? I'm not going to go in too much into depth on each of the patterns. That's going to be some continuous education stuff, all right? But this is just going to give you a general understanding. You'll be able to rewatch this video and try to apply the knowledge and so forth from there to help boost your trading. But like I said, later down the road, we'll do a deeper study on this, okay? Our goals for this section is pattern identification, trade execution, learn X, A, B, C, D, learn the different fib ratios of the harmonic rate patterns that we use, and how to define your price rejection zone with a harmonic pattern, okay? Again, guys, what a harmonic pattern is just added confluence, okay? Harmonic patterns is a methodology that uses the recognition of specific structures that possess distinct and consecutive fib ratio alignments that quantify and validate patterns. The essence of harmonic trading is the ability to differentiate price structures based on specific consecutive fib ratio alignments. Harmonics calculate fib aspects of price structure to identify high probable price return zones or price rejection zones. Okay, so this is why I had to give you the fib lesson earlier, so that way you understood what exactly fib means to the Forex market. Fibonacci retracements, they're kind of key when you know how to use them. All right, and harmonics go hand in hand almost with Fibonacci. All right, there's 3 rules or guidelines that are required to maximize profit and minimize risk when using harmonics, and we'll cover the most successful patterns, which would be the bat, Gartley, butterfly, not the crab. It's the crab, the crab and the cipher. There's a few other patterns we'll cover that are derived from each of those different harmonics. Okay, and I'll show you what a butterfly on the chart. The price point alignment of harmonic patterns is essential. Each pattern must possess an exact alignment and that must not be violated. The most specific point in all harmonic patterns is the midpoint, which is the B point. Unlike Elliott Wave number counts, harmonic trading denotes each point with letters marking each price move as XA, AB, BC, CD. So what that means is your first swing point would be X, your next swing point would be A, the inside return point is B. If you have an XAB alignment with your fibs, you should be able to paint some kind of harmonic pattern possibly, which will give you a nice indication as far as take profit, when to ride the trends, to go against the trends, and so forth. We'll go deeper into it, okay? 3 rules of use. The trade identifications. First step is to identify a potential trade opportunity. Harmonics use historically proven and repetitive price patterns that capitalize on overbought and oversold signals. So what that means is look left to trade right. If you have a potential harmonic, and let's say a D point ends at previous structure and it's a painted harmonic, that might be a valid harmonic. Or let's say if you have a ABC found out, XAB found out, and you wanted to ride it to point C, which sometimes people do, you can catch 2 entries when you're painting a harmonic. You can catch the BC leg, and you can catch the C to D leg. All right. Trade executions, rule 2. the validity of the pattern must be determined. Again, this is when you're looking left to trade right with previous structure. This is when you're looking at your fib ratios. And then again, of course, trade management. We'll go over some risk management rules later here in the next few videos, okay? You got to use the rules of your trade plan to maximize profits and minimize risks. And that's with any trade plan. Okay, so earlier in the training, guys, when we were doing Fibonacci retracements, we would fib this pattern right here, the lightning bolt. We would fib A to B, finding the C retracement, and then looking for the the CD leg, right, the D extension, which would be our take profit. That's a very basic harmonic pattern, which is known as the lightning bolt. It's a one-to-one measured move. One-to-one means this leg is about the same length and price as this leg. That's a one-to-one measured move. The market loves to move in geometry. It's used to identify trend reversals. So usually, guys, after this D point is completed, you can notice either another retracement or a trend reversal. It's a mathematical way to find a price rejection zone. The AB is an impulse wave, the first one. BC is the retracement. And CD is the next impulse wave and the extension. So these numbers, guys, how you read these numbers is like this. If you fib from this high to this low, the retracement of this C should be in between, should hit either the 382 and extend no further than the 886. All right. So anywhere between the 382 and the 886 ratio, this C point can end, and this would still be almost a valid setup. Now the pattern's not complete, guys. Remember, the pattern's not complete until this D is completed. So what you can do, if you're recognizing this as you're in an overall downtrend right now, and you recognize this BC is just a retracement of the AB leg, you can short, sure enough, right here and ride it all the way to the CD, and that's what you would do. And then take profit. At this point right here, you would then look for the retracement or reversal. Okay. Now, these numbers down here are the extension levels of D. So what this says is, if you fib from B to C, this D should have extension levels of 113 or to 314. Two things to look for. You want a retracement that rejects ideally at the 382 or the 618 retracement fib levels. It can extend all the way to the 886 and still be valid. It may wick to our sweet spot of the 786 level, which is great. Okay, so we place pending orders around these levels to re-enter the market and continue the trend. To find the projection of the CD leg, you can draw the AB trend line, copy and paste at the end of the BC retracement segment to project the CD. Is one quick way. The proper way is to use the extension tool, and then you would just basically excuse me, use the extension tool. You basically fib from A to B and then back to A. So what you would do is, to find this extension, fib here, extension to here, and then back to A. What's going to happen is it's going to give you some extension levels, and we'll go over this on the chart. We look for harmonic patterns and apply the harmonics on the 1 and the 4 hour charts, guys. Okay. If you're looking to enter in after the completion of the BC leg, your take profit 1 is going to be the B point. Your take profit 2 is going to be the extension. So what I mean is, if you enter up here at C, your first take profit is going to be right here at the level of the B point. Your second take profit is going to be this D point slightly below it. And of course, after the harmonic is complete, you can again re-enter the market at the completion of the D point. The next harmonic pattern is the bat. This is a trend continuation pattern. It may appear as an M or a W. What we look for to help you identify these are the double tops and the double bottoms. And what we're doing is looking for the projection of D again. Once the D completes, you can re-enter the market in the opposite direction if you wanted to. All right. So let's say we're in a bullish trend, right? We're in a bullish trend, a bullish bat. Swing low to swing high. Impulse leg is right here. Your B point retracement level should hit at the 382 or the 50 percentile. If you see price, if you're reading price action and you see price rejecting at those levels, you may have a nice setup to ride this B to C. But way before you even have the harmonic, what's going to happen is you'll have a fib from A to B to C retracement right here, and you'll have a D projection, which would be over here, right? Fine, that's what you want. That's the lightning bolt pattern. That's what we're expecting. Now let's see if we fib this right here. Okay, cool. And we're reading price action, and price action doesn't reach our extension and is then failing below this high right here. What you do is you fib from this high to this low, and this is going to give you this one of these ratios, and this is going to be the good C point. So now that you have your your A, B, C, D lightning bolt pattern from the fib lesson, that price never reached all the way up there to your extension. Price never reached up here to your extension. You can paint this with your harmonic tool, and we'll do this on the chart later. All right. So once you have the retracement level of this C point, you can then short the market and ride it to the D point. First take profit would be the B. Second would be the D. This 1618 and the 2618, that's the extension levels that D should end at. And that's basically how you read this. This 886% is telling you excuse me, the ratio of X to D. Okay? And I'll go over that, of course, on the chart again, guys. What you want to do to paint the bat, find the most recent impulse leg and return to the inside of the trend. Fib from X to A to find where B point should end. XAB should end ideally at the 382 or the 50% fib rate levels. After you find that B point, which is the most important point, right? After price has failed at the B, and we recognize that, you're then going to fib from the A to B to find out where the C point should end. And again, that coincides with the fib lessons from earlier, where you fib and try to find the CD leg. That's all you're doing, guys. ABC should end ideally at the 382 or the 886 fib levels, but doesn't have to be perfect. So on this one, guys, you can enter the market at the C point and ride it to the D point. You use the extension tool and fib from A to B back to A for the projection of the D. So you fib from A to B back to D on the bullish, fib from A to B, back to A on the bearish. Your D should end at the 886 fib level of the XA impulse leg. D ending point should align with the 1618 extension level from the AVA to give you the PRZ. So what that means is D should end, if you fib from X to A, this D point should end at the 886 ratio. Alright? But if you're looking at the extension from A to B, from B to C, then that should align with the 1618 or the 2612. Or the 2618. So what you're looking for the D point is this ratio to align with one of these two ratios. And then that's when you're going to enter. The Gartley, it's almost the same as the BAT, but it just differs by two ratios, and that's the B midpoint and the D extension point. It's a retracement pattern using the ABC corrective waves of Elliott that identifies when to re-enter for a trend continuation. So a lot of these patterns, guys, are trend continuation patterns, as you see. So again, you've got your impulse up, retracement. Excuse me. The B leg ends at 618 fib ratio of the XA. Okay? The D should end at the 786 ratio of the XA, met with the extension point of either the 126 or the 1618 of the BC. Okay? The C point, I'll come back. The C point should be, this C point retracement of the AB leg should end at either the 382 or the 886. So very similar to the back, guys. Only thing that differs is the B and the D. Begin with the most recent impulse leg, XA. Fib from X to A. AB retracement leg should retrace to the 618 fib level only. Again, AB retracement leg should retrace to the 618 fib level only. If it retraces to anything else, it's not valid. Fib A to B to find the C leg. C leg should end between the 382 and the 886 fib levels, but ideally at the 618. You can enter the market once the C leg is completed. And of course, to find where D should end, use the extension tool. And that D should end at the fib level of the 786 of the XA leg. And again, the extension level of 127 or the 786 to create your price rejection zone. Alright, so this is the cipher, guys. The cipher is the mother pattern of the crab, deep crab, and the alternate bat patterns. And what this involves is the extension point of the C. Okay? So, let's say this is the bat pattern, right? I mean, not the bat, the lightning bolt pattern. In the previous lessons, we would count this X would be your A would be your B would be your C would be your D, right? When it comes to harmonics, X, A, B, C. So at this point, XA should be the same ratio as almost B to C. Right? So what the cipher does is once you find your B point, which says it should end at the 382 or the 618. If you fib from A to B, C is going to end between these extension ratios. So what you want to do for the cipher is find the most recent impulse leg and inside return or retracement. Fib from XA to find your midpoint B. XAB should end either at the 382 or the 681 levels. But the 50% still makes it, the 50% level makes it invalid. If it ends at the 50%, that's an invalid cipher. You want point C to end beyond point A. So what you would do is use the expansion tool and find the XAX expansion where C point should end. With the expansion tool, previously we would fib from A, B back to A to find D. But to find C, we're going to go XAX to find the expansion of C. Alright. And again, guys, we will go in depth into each of these harmonic patterns in a deeper study. This is just going to show you what you're looking for. I'm going to show you how to draw it on the charts, okay? You want C point, we went over that. Draw from X to A back to X. Point C should end at the extension levels 127 or 1414 levels, okay? If B retraces to 382, C will end around the 141 expansion. If B retraces to 618, C will end around the 127 expansion. Once the C is completed, you can enter it and ride it to point D, which would be your take profit. Point D should end at the 786 fib level of XA impulse leg, and we place pending orders between the 618 and the 786 fib levels. To find your take profit, you fib from C to D. First take profit is a 382. Second take profit is a 618. And then, of course, you hide stop loss within previous structure, 10 to 15 pips, depending on which chart you see it on. The crab pattern is a distinct 5-point extension structure that utilizes a 1-6-1-8 projection of the XA leg exclusively. So this is the only harmonic pattern where you would use the projection of the XA leg. Okay, guys? It's a counter trend trade actually that is highly accurate and successful. So the crab is either a failed Gartley or a bat pattern. So one of those two patterns failed, and that's when the crab is created. The XAB leg is either the retraces to the 382 or the 618, and the ABC leg is either the 382 or the 886. The crab has deep extensions. Okay, guys? Let's take a look. So, D point is an extension of the XA leg. Okay? So what you would do is either you can fib from X to A, and it's going to give you those fib ratios down here, or you can use the expansion tool and go X, A back to X, and it should give you the fib, the D point ratio, the extensions. Okay? So, oh, excuse me. B point, that is a retracement of 618 of the XA leg or less. Okay, so your midpoint B must retrace to the 618 or less. The extreme BC projection is typically a 2618, 314, or a 3618. Okay, so what that means is this projection right here, the BC projection, should end, this D point should end at the extension levels of the 2618 or the 3618 of the BC. That's what this is saying. An alternate 127 or 1618 AB equals CD pattern is required. That's a lightning bolt pattern. The 1618 XA projection as the defining limit with the structure, that means the D point. That's what you should put your defining D point at, is at the 1618 ratio of the XA leg. Your C point should range between the 382 and the 886 of the AB leg. So what you do is you use the expansion tool and you draw XA back to X to find the expansion of XA at 1618. And that's where you mark the D. You then use the expansion tool on ABA to find the expansion of the AB at either the 224 or the 3618, which is also D. Okay? So if the 618 from the XA leg and the ratios from the AB expansions are aligned with each other, that's going to be a nice price rejection zone. So if these ratios, one of these ratios aligns with this ratio at D, that's going to be your price rejection zone for your entry. Again, guys, we're going to go in depth on these here later, okay? I'm not going to cover all of these. This is something that you can, of course, go back later and watch. But I'll show you a harmonic on the chart. Let's take a look. Okay, guys, so here we are on the Euro USD hour chart, where we left off from the previous video, marking up your trend lines and going over Fibonacci and adding in Elliott Wave. What I see on the charts now is a possible butterfly harmonic pattern. Okay, so when you're looking for harmonic patterns, like all of them, you have to find the B midpoint, the most important point. That B midpoint is at the end of the first retracement within inside the trend. Okay, so here you have one swing high to a swing low. Here's the inside return. This first point is your B midpoint. Okay, so now that you know that you're in a retracement, you can fib from high to low and find what this ratio is, right? Fib high to low. So this B point's ending at the 618. Now, when you're first doing harmonic patterns, guys, I've provided you with a couple of printout sheets of the various harmonics that we use along with the ratios. Print those out and have them by your side or put up somewhere, okay? So that way you can just, when you're fibbing your rate, when you're doing your fib tool and looking at retracements, you have them readily pulled up to help you identify, hey, what potential pattern this may be. So now that you found your B point, right? You found your B point right here. You now must fib again to find your C point. So B ended at the 618. So you would begin to look for bearish harmonic patterns, okay? Because you're looking for the D point to end up here to sell with, right? So you're looking for bearish harmonic patterns with the B point that ends at the 618. Okay? So now that you've identified that, you can either leave that fib tool there, which I'm going to for training purposes, or you can delete it. But you must fib from this swing low to this swing high now to find this point. This is going to be your C point. This C point's ending at the 50 percentile ratio, okay? So now you've got the AB. You've got a 618 return on this leg. You've got a 50% return on this leg. What you would do is begin looking at your harmonic pattern sheet and just finding those ratios. Let's see. All right. Once you have that wrote down or have that memorized or whatever, you can then delete those fib tools. Okay. So now you have to find the extension of D, right? To me, this looks like a possible bullish butterfly. So this D point or this C point on the ABC correction is a D point in the harmonics. Or if you did the fib from A, B, C, finding D point again with the fib, however you wanted to do it, guys. This point should end in the harmonic world around the 1618. So to find that, you didn't fib. You can use fib, just a regular fib tool, fib from low to high, swing low to swing high. And remember those ratios we drew in? They become your extension levels, right? Here's the inverse of the 1618 is right here. Met with our what? Mid-range levels, trend lines, possibly some moving averages by then, right? That's one way to draw the extension. Or you can use the fib extension. Fib from low to high, back to low. Look at that, the 1618. Let me see if I can delete one of these real quick. Wrong one. Again, with the fib extension tool, A, B, back to A. That same 1618 level is still right around here, guys. So now that you have all this confluence, here's what you have. Okay? Here's what you do. With TradingView, this is why I like TradingView so much. X, A, B, C, Alright, so I'm not going to make it perfect for the training purposes, guys. Okay, so look. That's basically, y'all see these ratios? They're giving you the same ratios as what I shown you in the PowerPoint, basically. When you use the drawing tool, this ratio is depicting the fib retracement of this leg. This ratio. The C point, this ratio is depicting right here. This ratio is depicting the retracement of this leg. Okay? It's giving you your ratios when you're using this XABCD tool, guys. So if this was a perfect world, all these numbers would be perfect like in the slide, but it's not. Okay, I didn't draw it perfect. This is to give you an example of a possible bearish butterfly. So what you can do is, had we found this C earlier, off its trend line bounce, if you want to call it that, you could have wrote this C point all the way to the completion of the D point up here, or the first take profit, right, is your B point. So you could have caught some pips. Get your B point, re-entered right here, or just held it open to your D completion, which bounces off all this confluence. Weekly mid-range, your trend line, your moving averages, previous structure. Your stop loss goes way down here, guys. So that's why it's of utmost importance to have proper risk management, because you're going to have wide stop losses. You don't want to risk $50 on a $300 account. You want to risk, let's say, $30. So your lot size is going to be smaller. You're going to have to calculate that. And we'll get into that, guys, in here in a video or two, okay? But that's basically what I have marked up for the Euro USD over the following training videos, guys. Let's see how it plays out in the ultimate bigger picture.